SpaceX went public and instantly became a $2.1 trillion giant. SpaceX sold $75 billion worth of shares at a $1.77 trillion valuation. By the close, the market valued the company at $2.1 trillion. That puts SpaceX ahead of Broadcom and Tesla, making it the sixth most valuable public company in the U.S. The stock priced at $135. It opened 11% above that level, traded around 20% to 30% higher for much of the day, and closed at $160.95. For IPO bankers, that kind of first-day pop is almost exactly what they want. The demand was massive. Big institutions like BlackRock showed up, and individual investors rushed in too. Some retail buyers reportedly received only a tiny fraction of the shares they requested. But this was not just a rocket story. The real pitch was AI. SpaceX says its total addressable market is $28.5 trillion, with $26.5 trillion coming from AI. The vision is orbital data centers that could support the next wave of artificial intelligence. The risk is that the business is still losing money. SpaceX lost $4.9 billion last year on $18.7 billion in revenue. Starlink was profitable, but xAI lost $6.4 billion on $3.2 billion in revenue. That is why some analysts called the valuation hard to justify. There is also a governance risk. Musk controls more than 80% of the voting rights, making it nearly impossible to force major changes without his support. Critics called for investors to halt or boycott the offering. Now the next catalyst is forced buying. SpaceX is expected to enter indexes like the NASDAQ 100, which means benchmark tracking funds may have to buy shares. The IPO could also set the stage for massive AI-focused offerings from Anthropic and OpenAI. SpaceX did not just launch a stock, it launched a new market narrative. For more technology stock story like this, subscribe to Briefing Block. We break down the number, the trend, and the story behind the trade.